Hello, everyone, and welcome to this edition of Startup Central. I'm Avan Dabash. This is the show that's focused on all things new age tech, innovation, startup, and of course, digitalization. If you've got any questions, feedback, or commentary, reach out to us on suc@etnow.tv. All right, let's kickstart the show then by putting in the spotlight Fresh to Home. It's essentially an online platform for fresh meat, fish, as well as seafood products. And the company has just raised $104 million, or about 863 crore rupees, in a Series D fundraise round, which has been led by Amazon Samba Venture Fund. Joining me right now to talk about the business, how they plan to grow, and what the funds will be utilized toward is Shan Kadavil, who is the CEO and co-founder at Fresh to Home. Good to have you on board, Shan. So much to talk about. I really want to take the clock back and discuss how you started the business. But first things first, let's get down to business and discuss the latest fundraise. So this would value the company at what? Would you be willing to share? $450, $550 million? And where are you going to really utilize the funds? Because I understand there's going to be a lot of focus on Middle East and North Africa.
Hi, Avan. Thank you for hosting me. Just to clarify, we are not just an online player. We are an omni-channel D2C brand that's both offline and online now. And we are present today in about 160 cities, both in India and the UAE. The vision of the company and the mission has been steadfast from the 7 years. This is to provide chemical-free fish, meat, antibiotic-free poultry, and preservative-free, ready-to-eat and ready-to-cook to all of our, 2.5 million consumers. Just to answer your earlier question, we have got too many discussions going around valuations, right? And that's especially in 2021. The sentiment was all around figuring out the top line metric, right? As the only focus of success. Our valuations are much higher than the figures that you've quoted, and our valuations are almost 2 to 3 times higher than the previous rounds. But at the same time, intentionally, as a responsible entrepreneur, I want to make sure that we don't focus on just the top line as the metric, right? We have to focus on the bottom line. And we would prefer to be called as a proficon versus a unicorn or any other sort of narratives in the media. And this is because I think all stakeholders, right, especially the investors, valuation is just a vanity metric, right? At the end of the day, what matters is your exit, which is in our scenario is a IPO in 3 years. And an IPO scenario, the capital markets look at a combination of bottom line first, and it'll be either a EBITDA or a PAT or some other multiple. And I'm just very proud to tell you that we are fully, operationally profitable. And that's the key thing from an investor perspective that we are the most happy about. And that's the key highlight I'd like to highlight today.
Yes, of course. You've given me so many headlines. Plan to do an IPO in 3 years. And yes, of course, you've been talking about bringing a profit-con. And I just want to address the numbers. FY22 revenues were at about 1,200 crores. And you're projected as well to continue this revenue run rate. And you have achieved operational profitability as well at a company level. So this traction is going to continue?
That's correct. We anticipate, we have grown about 10 times in the last 4 years. Now we're at a much larger scale of revenues, but at the same time, we are seeing really strong growth, right? We're seeing about 40 to 50% growth. The market size is incredibly large, right? So if you look at it, 50 billion US dollars is the market size of fish and meat in India. And if you take us and our other online competitors and also supermarkets like More or Spar or any of those kind of folks, together the organized players, in my estimate, are less than $750 million in revenue. So 1 to 1.5% of the market is online, organized players, right? Which is insane. It's a huge, large opportunity. And that's really what will drive the growth vector going forward.
And you said that your valuations are 3 times your previous fundraise round. Did I get that correct? Then the number I quoted?
Yeah, we are between 2 to 3 times the previous valuation.
Okay, fab. Okay, now moving right on, like I said, I want to wind the clock back because I believe you found that website, seed2home.com, which was started by Matthew Joseph, the fish exporter, who is, your co-founder. So how really did things begin, or how did the idea really stem and coming about ordering this produce from a website?
So I just to give a quick background, 2 minutes, is that I'm a serial entrepreneur, done startups in both in the valley. Last one was, I was the CXO at Zynga, where I used to run games like Farmville and Mafia Wars. when I was relocating back from San Francisco back to India, I discovered a website that would deliver fish and meat from Cochin to Bangalore, where I was based then. And it was amazing from a quality perspective. And I like my fish and fish curry and rice. And at some point, Matthew could not keep the business running. And e-commerce is a different beast altogether. And I couldn't get good fish. So as an entrepreneur and as a passionate foodie, I angel funded him, got him up and running. And that's really how the whole thing began. We are 8 co-founders, and it's an amazing journey. We continue to go steady on the same set of vision, which is really to give people chemical-free, antibiotic-free food. And now we do it across 2 million orders per month. And that makes us the largest in the world in the D2C online space for fish and meat.
Okay, that was really summing up the overall story. And so the product portfolio, if you could just walk us through what it's currently led by, how much each of your product categories contribute to your overall revenue, as well as how much you're seeing, revenue coming in from the UAE and some of the other geographies.
So we see about 40 to 45% of our revenue is fish. We are, definitely the largest fish player anywhere in the world, just given the amount of variety, about 2,000 SKUs. We're also incredibly strong in poultry in general. All of our poultry is antibiotic free, and that's really the big driver from a consumer standpoint. We also put certification of all our products on the website, right? So it's just not about talk about it. We allow the consumers to download the certificate of each batch they get. We then 11% or so of our revenue is ready to cook and ready to eat products. And overall, about 15% of our revenue today is coming from international. We anticipate India to continue to be the growth vector, and the ratios will largely be the same, right? Because we only scratch the surface of what could be possible in this incredibly large market.
Okay, so just let's break it down. Out of curiosity, I understand that there's close to 70 orders per minute that are made. What are the kind of, what is the kind of penetration as well that you're seeing in some of the tier 2 and 3 cities?
So we're very early in the journey. I would love to say that I have largest market share, but I don't, because the market is incredibly large. So we would be, while we are the largest in the world, it's still less than 1% of the overall market opportunity, because fish, as you would know, is about 1% of India's GDP, right? So I don't know if that's a stat that you're aware, but it's incredibly large. 15 million people are employed in this segment. We have about 10 million metric tons of fish consumption in a year, right? So it's an incredibly large volume. We do 25,000 tons of fish and meat annualized, and we do about 10 million tons of this is actually contract farmed in our platform. And we additionally also source using an electronic auction platform across 3,000 to 4,000 fishermen across 300 to 400 harbors in India. So it's a really, really massive volume, and it's growing profitably.
Now, at the same time, one can't ignore, Shan, the fact that there is quite a bit of competition within the space. Licious, BB Daily, Easy Me, just to name a few. How is it that the company is navigating the competitive landscape?
So, all of these competitors are amazing competition, and they've got their strengths, but our positioning is very mass market, right? So we are positioned for the middle to upper middle class audience, and that segment is quite large. We are not positioned in a premium fashion, and that's intentional, right? Because we have a great quality, the brand is well known for really amazing quality. Ranveer Singh is the brand ambassador. But at the same time, we believe in giving accessible and honest pricing to people, and that's really the brand edifice that we built the company on. So that's really what's taken our vector, because at the end of the day, when the product speaks for itself and it's cost competitive and high quality, then you don't need to put a lipstick on the pig, right? It's essentially the brand and the product speaks for itself. That's the huge moat we built. We also built a moat by going directly to source. So we operate the entire end-to-end chain at 40% gross margins. That's not something that anybody else anywhere have been able to replicate. That gives me a very profitable venture to start with. We are fully operationally profitable. And last but not the least, the market size is so large that all of us put together is small, right? So really the opportunity and challenge is to go omni-channel, which is what we have done now. We have launched in about 30 stores in Bangalore. And that journey will allow us to see an offline consumer try our product and then move them online, right? And that's incredibly fascinating because it reduces our cost of acquisition. Now, while the revenues from these 30 stores are not material, we see about 20% of Bangalore's new users now coming from these stores. That's a new exciting opportunity in terms of running the business at much reduced cost. And that, because if you look at it, any D2C brand, marketing is the biggest cost, right? And to be a Proficon and to be, ensuring that there is bottom lines to play with, you need to reduce that cost. And we have done it in an incredibly interesting way by going offline.
So I just want to understand as well how it works. You were talking about, yes, you being, eliminating the middlemen, and now you're really empowering fishermen and farmers to electronically auction their products and to the vendors and sell on the website. Can you just walk us through the technology-enabled commodities exchange platform as well that was started?
Yeah, so we are essentially, a very tech-focused company. The 8 co-founders are all from the tech background with Zinger, and we built, things like the Linux kernel or Android phones and stuff like that, right? So a really strong tech team. So the technology started with a patent owned by me and Jayesh and Neil and the entire team, and it's around how multiple people across different harbors in India can auction with you. The fishermen's lives are the most impoverished. They get exploited by the middlemen who are, in some sense, glorified loan sharks, right? They give you 90 rupees in the morning and they'll collect back 100 rupees in the evening. This is really the aspect that we make a change. So what we do is in this markets, we allow them to auction with us. These are not the most literate people. So the app is, UI is structured so that the camera can detect the kind of fish and allows them to put a price back to us. On a given day, we see thousands of these auctions across a huge number of harbors in India. Then we have real world assets, right? Trucks and, directly and indirectly employing about 20,000 people, collection centers, large processing centers, and all of that, direct with cold chain back to the end consumer. And in this process, the fisherman gets about 20% higher price than what is normal, which is very important for them because you're cutting off the middleman. We get geographically the cheapest price, and it's a win-win for both parties and the consumer, right? Because the consumers, we were able to price it, at par or lower than the on the wet market on a premium product, right? And that's really the USP we have cracked.
As well is coming at a time when we're seeing technology and the startup industry valuations under stress. There's a lot of companies as well that have been laying off employees left, right, and center. How are you looking at the overall environment? Is there a worry that this could even seep into Fresh to Home?
I have hopefully more gray hairs than many of my startup. Not that gray hairs translate to more wisdom, just that I've seen more cycles being in the US across two areas. So I think what startups got wrong, or some startups would have got wrong, is that they didn't have a moat, right? They didn't have that unfair advantage that made the business viable. And it's been the focus all around on top line metrics, right? Branding, running across the board on that. What we did is, we took the sort of unglamorous road. We took 7 years to build a moat, and that moat was hard. We had to go with fishermen. We had to sit with them. We had to actually teach people who do not use, technology today how to use technology. We've had to go through a cash-based economy to an online, UPI-first economy. It was hard to do, but once we got the moat right, we got incredible sort of unfair advantage in sourcing. That's allowed us to build a profitable business, right? We are operationally profitable. And that's the key difference in this environment, right? Funding macros are challenging, but at the same time, good companies will get funded. I suspect that Fresh to Home current round might be the third or largest or fourth largest sort of funding round in consumer in the last 12 months' time. And that is a reflection of the trust that investors are placed in us, right? Amazon, for example, is a gold standard in customer obsession excellence. We have demonstrated that. We've also demonstrated the financial discipline, and both together has allowed us to raise this larger round of funding.
Okay, so what's the long-term vision then, the growth plan, how you see the company scaling up and growing in this industry?
So we think we've just got started because although it's 7 years old, it still feels like a child to me. We still now have to start walking and running because I'm saying that from an absolute percentage share of the market, which is less than 1%. So there is still the 99% to go. We are looking at a public listing in a near term. So in the 3 years or so timeframe, still getting the planning right for that right now. So the long-term vision from a commercial sense is go through an IPO. But what really fascinates me is the non-commercial element of it, right? Which is to provide chemical-free food for the next billion and also empower fishermen and farmers, right? These are the future of our country.
Sham, we wish you all the best. Thanks so much for taking time out and joining in with a take on the business as well as the latest fundraise.